Fintech. We're going live right now.
Basically, I figured out a way to smooth the credit card trends into believing that they're really normal credit card transactions. So when they have their own merchant code, and they try to go to and then their MasterCard they run it division, and they reroute the transaction to us. I did all this in 2010 real estate division. So from the mobile end, the consumer is agreeing to make the next transaction at that terminal. The way that we scan they scan the terminal code, and then has to do it when they have the starting off says, okay, which card is it? So plus the facility that's coming out of the card. It's very good. You want to we send confirmation back we do settlement. That was my invention back in
because I don't know that, like, at first I'm like, it sounds too good to be true.
Well, sometimes those things are, but sometimes they're not.
All right, everyone, thanks a lot for coming down. We have Kelly here, and she's going to talk a little bit about Techstars Accelerator / with Barclays, and some of the details about it. Some of you might want to participate in it. There is a specific Fintech area in it.
Yep. Yep, exactly. Hi, everyone. I'm Kelly Fryer. I'm the program manager for Barclays Accelerator, powered by Techstars in New York, which is the longest name for an accelerator ever. Which essentially just means I run operations for the accelerator. I brought a PowerPoint. If you can't see it, don't worry about it at all, because I'm just going to talk through it. If you have questions, please just shout them out, and it'll make this way more interesting for everyone. Want to keep it dynamic and just casual. If there's any questions that you have from the gate, let me know, and I'll make sure that I definitely hit them. I don't know if there's any.
Did you say New York?
New York, yeah.
So not here.
Not here, sadly. So yeah, I'll dive into that. I guess we'll just go ahead and run through. So the program's run by myself and John Zanoff. If any of you have ever been to any of the Empire Startup events in New York or San Francisco or Toronto, that's John. So we're focused on finding the best fintech companies out there and investing them and helping to accelerate their growth and find amazing opportunities for them to grow. So Techstars Barclays, it's confusing how the partnership is kind of matched up. So I and John work on the Techstars side. We run in partnership with Barclays. So Barclays has kind of tapped Techstars to run their accelerator program. Really, we see this as a great opportunity of combining the powerful network of Techstars along with the amazing banking relationships and just kind of global bank that is Barclays to offer a great accelerator program for the fintechs that come into our program. We run 3 programs with Barclays globally. So the New York program, which I work for, we also have a London program and a Tel Aviv program. They all run at different times. So depending on the market that you're interested in, one might be a better fit over the other. So kind of the basics. So to answer your question, it is a in-residence program. So companies come to New York for the 3 months. This year we're running from September 10th to December 5th. The companies get a $120,000 investment in exchange for 6% common stock, which I'll dive into more of those details here in a minute. And in exchange, you're getting surrounded by over 150 mentors and investors and people that are there just to help grow your business and make introductions and connections for you, as well as kind of put on a fast track towards relationships within Barclays or within other major financial institutions. So what is Techstars? Techstars is the worldwide network that helps entrepreneurs succeed. What I take that to mean is that we give you access to resources, talent, capital, mentorship that you wouldn't otherwise have access to. The Techstars network is over 10,000 worldwide, including investors, mentors, alumni, various people that are there really just to help your business to succeed and gain access to these amazing resources.
Is Techstars just focused on fintech, or is it multi-industry?
Yeah, great question. So Techstars itself runs 40 accelerator programs globally. Some are industry specific, like ours, which is fintech focused. Others are industry agnostic. So for example, here in LA, we have a Techstars LA program, which is industry agnostic. They look at everything. We have a Techstars music program that only looks at music companies. And we have a Techstars healthcare program with Cedars-Sinai, all in LA. So all focused on kind of different areas. Yeah, good question. It's a company founded by entrepreneurs and by venture capitalists, which I think is just to say that we get it. We know where you're at as a founder. And the founders of Techstars built the company knowing that startup founders need access to more than just money. They need access to a network and to mentorship in order to drive the business forward. That money is not just the end-all and be-all. Or even accessing the money requires mentorship and network. And so Techstars really put that to scale with their Accelerator programs. We also run Techstars startup programs or startup weekends and weeks, which you may have seen here in LA, as well as on the other end, we also run a venture arm to invest in later stage companies, so Series A and beyond, whether that be companies that have come from the Techstars portfolio and accelerators or just companies in general. So on the Barclays side, Barclays is heavily involved in the program. That's always a big question that we get. They're not just there as a name. They're there in the accelerator every day. We work with their open innovation team, which their job is really to direct our startups straight to the key decision makers. Within Barclays, within other financial institutions. So instead of you having to navigate your way around the bank on your own, which, as we all know, can be a nightmare, they help you to do that. So they help you to find the right people, get access to the data, to the customer base, to focus group feedback, to whatever you might need. We really think of them as kind of an enterprise in residence to help get market feedback on your business. Before you launch. Mm-hmm.
Question on that, because I come from the banking side, so a bit different than some of the other folks. No, I agree. but my forward thinking goes to that. So I'm curious, what made Barclays come to sort of having the confidence and comfort in going into that space and getting access to capital? Did you find them, or did they find you? When you mentioned the innovation team, I'm sorry, you mentioned a team specifically. How did that marriage actually happen?
Yeah, so Barclays came to Techstars originally wanting to really use the Accelerator program as a way to see what was coming down the pipeline in terms of innovation within financial services. So instead of going to like McKinsey to go figure out what are the financial tech trends coming down, let's build an accelerator and check them out for ourselves. From there, it's kind of evolved now into them really wanting to invest more within Fintech, and they've really grown it out a lot. So now they're focused a lot more on, okay, what are the big areas of tech that is going to disrupt our market? Whether or not we as Barclays can consume it is a totally different question. We just want to know what amazing technology is out there, and how can we help spur that on for innovation in the industry.
It's $150,000 for 3 months, 6%, is what you're saying?
120.
So, and after 3 months, is there another seed round? If they like you and you want to move forward, they stay there, and at that point, what's the equity percentage given?
So that is something to be determined by the company in Barclays. We have seen Barclays sometimes do follow-on rounds. We've also seen Techstars Ventures will usually do at least one follow-on round within each cohort. So it depends is the short answer as to whether or not they continue.
You might get to this, but in terms of like Techstars and Barclays, what percent of their history with the fintech specific market? Is it like a small percentage, or is it something they've been focused on?
Like how long have they been doing it? Is that what you're saying?
Yeah, like how many percent startups?
Yeah, so for the New York program, this will be our 4th cohort. Globally, this will be our 13th, I believe. So they've been doing it for a while. Yeah.
Does it require 2 founders to attend the full 3 months, or just the main, the CEO?
Yeah, great question. So we single founders or having co-founders is not a hard requirement. With that being said, we do see a lot more success with at least 2 people, with at least one being technical, especially depending on what your product area is.
I just meant like being present because.
Oh, sorry.
Yeah, no. I mean,
Yep.
I have a tech co-founder, but it's like I don't think he'd be available. I might be available. So.
Yeah, so we do generally ask for all founders to be in New York for the 3 months. Again, kind of going back to also why we encourage not just single co-founders, it's kind of the same answer, is that during the Accelerator program, you're running your business, you're participating in the Accelerator, you're attempting to have some kind of life or sleep or something outside of the Accelerator and running your business too. So it's just a lot for a single person to take on. For example, during the first month, we do what's called Mentor Madness, which is basically you meet with over 100 mentors in the course of like 2.5 weeks. And you're just kind of inundated with feedback and taking all of those data points in. So you want to be able to iterate really, really quickly. If you're doing it by yourself, it just becomes really hard. Or if you have to relay that message back to someone who wasn't present at all of those meetings, it becomes really challenging too. But that being said, we've definitely, we have seen some founders that just show up as just one. Again, we don't encourage it. And we have seen some companies accepted that just have a single co-founder or a single founder.
How do you protect against bright ideas being stolen?
Stolen by like other companies or the mentors or just everything? It's honestly not been an issue.
Because they're all poor ideas?
Not because
Not all.
exactly, it's execution, not idea. We don't feel that it's the idea solely that makes the company. We kind of have a joke that we take companies in spite of their ideas. You're going to pivot, you're going to change. Usually within one cohort, we won't have companies that are working on in the exact same space or in a similar market, just again for that conflict of interest. But the mentors that come in, the investors that come in, the corporates that come in are there. I think I passed a slide earlier that said give first is Techstars' first value, which essentially means that they're there to give, they're not there to get. And that's something that is a very, very hard rule at Techstars. Anybody that we bring in goes through some vetting to make sure that they're there for the right reasons and not to steal your ideas.
Socialism involved. How about that?
So if you guys encourage multiple founders to come, how much is allocated to each founder out of the $120,000 for living expenses, for rent, office space, or whatnot?
Yep, so the way, and I'll just fast forward a little bit. This might be easier to see. So the way that the deal itself is structured, it's $20,000 cash. In exchange for the 6%, and then there's a $100,000 convertible note that's up to the founders to opt into or not based off of previous valuations and whether or not you want to take it. With that being said, the $20,000 for those not based in New York already are typically used for living expenses and things like that. We do give you free co-working space during the 3 months of the program, and oftentimes usually another 3+ months after that too. But in terms of living it itself, we don't offer like housing or things like that. We can help you find housing.
So for 20 grand, you and whatever founders are with you down to figure it out.
Yep. Yeah. I mean, honestly though, during like I said, this is our 4th cohort, and definitely it's a challenge moving to New York, and New York real estate is obviously a challenge in and of itself. But at the same point, I think the value that the founders are deriving out of it ends up being worthwhile for those 3 months of
right.
living in tight quarters.
And who facilitates the $100,000 being spent with each tech company that it's easy to funds? Who has control of those funds? The $100,000.
I guess ask it a different way. Where's the $100,000 coming from?
20,000 goes to founders. 100,000 goes to your company. Out of the 100,000, who's in charge of, I guess, dispensing the cash, and who's in charge of making decisions on what that cash is being spent on, I guess?
The company.
The company. It's yours. It's the company gets to
Spend any way you want.
Invested in the
Yeah.
Okay.
Yep. It's up to the founder. So I mean, consider it as the same way you take a convertible note investment from any other source. It's up to the
They can
company
do
to
whatever
spend
they
as
want
it's.
with $100,000. The tech company.
If you want to,
Vegas,
yeah.
maybe.
Is that the success or detriment of your company? Yeah.
Wow.
We're not there to tell you how.
And there's
how
no
to
lie
spend
in the
it.
sky. No one's looking over the 100,000.
Now they are.
I mean, consider us as investors the same way you would other investors. Obviously, we expect that you use that money smartly towards the business, but at the end of the day, it's the decision of the founders.
So what's sort of the typical number that you've seen on the financial fintech in Accelerator? The number of companies that have applied compared to those that have been accepted?
Yeah. So usually in a recruiting cycle, we'll talk to about 1,000 companies, and we take 10 per year.
Cool. What's been the success rate of the companies that come out of there for the second round of funding or an exit?
Yeah, so we have, right now our rate is 90% of Techstars portfolio companies are either still active or have been acquired. And we, in terms of funding, I believe the average is about 3.8 million raised.
Nice.
What stage is your...
Sorry, 1 second. I know she had a question.
I was asking about what's the stage that companies typically enter?
Yeah, great minds think alike. So in terms of stage, we're pretty stage agnostic. We see everything from pre-product, pre-revenue, all the way to companies that have already sometimes even raised a Series A or have significant MRR. It really depends on, for you as a founder, what your goal is of getting out of the program and whether or not coming into an accelerator program makes sense for you. But we see a whole wide range and can help you along many points of that range. And then kind of the usual second question that we get after that one is, what areas of fintech do you look at? We look at fintech also really, really broadly. So we, for example, if I look at our last cohort, we had everything from like capital markets plays to real estate and impact investing to even like a professional coaching platform that focused on financial services and VC clients. So we see a wide gamut, B2C, B2B, B2B2C, all across the board in terms of companies. No more. I was liking this. Okay, I'll keep going and see if there's anything else interesting. 90% we've talked about. Techstars portfolio companies represent about 5% of all Series A deals. And in total, we've done about 4.6 billion in total raises, with that 3.8 on average. We talked about fintech, we talked about stages. In terms of how we evaluate, that's also another big question that we get a lot. So the application process, you fill out a form, it asks you questions about the current state of your company, what your vision is for the company and kind of the long term and the big picture, about your team. We really want to get to know your team and what's your background, what's your credibility, how are you guys the right people to make this company a success. And then we ask for two videos. One is a product video, one is a team video. Each one is a minute long. Doesn't need to be high production value by any means. We just want it as a chance to get to know you and what you're working on. So be yourself, be authentic in that. And that kind of goes into what we evaluate for. So team is first and foremost. We want you to be really, really passionate about the problem that you're trying to solve, especially as you pivot and shift, that the solution you have right now might not be the solution you have in 3 months or 6 months, so that the problem you're trying to solve is just what you're insanely obsessed with. And that you also have, again, credibility to execute and make this vision happen. After that, we start getting into things around like size of market opportunity, feasibility of your tech, things like that, that are pretty typical investor kind of areas of focus.
So the model you're describing seems a little bit like kind of a pre-client kind of model. I'm curious about, in terms of that 10 cohort you end up selecting from 1,000,
Yep.
how many of them have existing clients? Because I'm concerned about that cash value, given companies that might have clients, they could get 125K kind of along. Maybe not a 6%.
Yeah.
Not the network. But I was curious about, do you guys do seed funding as well? 3 to 5 million, or is it exclusively low and then pretty high at Series A?
Yep. So we, in terms of Techstars Ventures will do seed funding. So it's not just like the standard deal and then all the way to like Series A. They'll also do seed rounds as well, especially for that follow-on. We, in terms of companies that already have clients, like I said, we do see some companies come through that do have clients. It really depends. So, for example, if you're a B2C company, that's a lot easier to launch typically than if you're a B2B company that has to deal with the long sales cycles of dealing with enterprises. So for companies that are already launched and do have clients, we tend to see a little bit more that maybe they're trying to refine their value proposition, make sure that they're laser focused on the right priorities of continuing to build out the product for those clients that they already have. Or maybe they're looking for biz dev opportunities to get in the hands of more clients and create more relationships there, as opposed to someone who's still building out the product and waiting for launch.
What's the selection process?
Yeah, good question. So applications are open now through May 13th. From there we go to, and I guess kind of tied with that, that's kind of why we do this show. We go around to a bunch of different wonderful fintech ecosystems like this one, so that we can start meeting founders early, kind of put face to name when we're reading applications. So applications close May 13th. From there, we'll go into a little bit more of a formal interview process where the companies will meet with Techstars investors as well as Barclays executives, get a better sense of the business, the tech, the strategy behind it, and then decisions come out by first week of July.
About what percent of the 1,000 companies you talk to do you end up talking to for those more formal interviews?
Good question. So we'll usually, for the more formal interviews, whittle it down to closer to 100. Yeah. And then we'll we'll go through stages of interviews, and then we'll do a final selection or final interview of probably about 25 to 30. And then from there, we'll pick our 10. It's a long whittle process.
Any other questions?
Yeah, anything else?
Is the program in London significantly different to the one in New York?
Structure-wise, all of the programs are more or less the same in the sense that in month one, we're heavy focused on mentorship. So again, those 100 mentors that I mentioned, and helping you really get your arrow pointed in the right direction, really figure out what are the top priorities for the business. Month two is then focused on execution and growth. So helping you to either get pilots or do biz dev opportunities, really focused on that kind of customer development and revenue generation. And then month three is focused on the story. So helping you really communicate the value of your business, mostly for the purposes of raising money. A lot of companies do want to raise by the end of the program. So it's helping you figure out your fundraising strategy, things like that. So the difference between the New York program versus the London program versus the Tel Aviv program in terms of the fintech one is really the ecosystem, the difference of the people that are surrounded there versus, New York is different than Tel Aviv. So my question is always to founders, where essentially do you want the epicenter of your financial network to be? Do you want it to be in New York? Do you want it to be in Tel Aviv? Do you want it to be in London? Depends on what market you're in and what makes the most sense, or where maybe you already have a ton of contacts in New York, so going to London makes a lot more sense. Or we had this past cohort, we had a company based out of Tel Aviv that was focused on the mortgage market, so they wanted to come to the U.S. So they came to the U.S. for our program. But that being said, Techstars, again, is all one big giant network. So even if you're in London, you can still talk to myself and John here in New York, and we'll introduce you to New York-based investors or companies or whatever you need.
Does Fintech operate outside of Barclays fund as far as running a VC?
Sorry, does Techstars have other fintech programs does Techstars have other fintech programs that are not in conjunction with Barclays?
Yeah, you guys operate separately from Barclays, but say you have your own funds or maybe partnerships with other funds or whatever to run a VC outside of the Barclays partnership.
Well, yes, yeah. So each, any of our vertical specific accelerator programs have its own separate fund that's in partnership with whatever company. So, for example, we have a retail focused one with Target Minneapolis that has a separate fund than Barclays. as well as the Techstars Ventures team has its own separate fund. In terms of kind of the fintech umbrella loosely, we do just released a prop tech program out of Toronto. And we are starting a InsurTech program in North Carolina with MetLife. So we're starting to expand. And then you also see, we also have some fintech companies that decide not to go to one of the Barclays programs. They want to go to, maybe you want to stay in LA, so you apply to the Techstars LA, which is an option as well.
Any other questions?
What are some of the challenges across the board that all the fintech companies you work with face?
Not able to communicate what their company is. Not able to communicate, or haven't spent enough time talking to customers is honestly probably the biggest. It's pretty fascinating to see the transformation of once of when a company comes in and they think they know everything about their customers and they think they've figured out all of their assumptions, and then they go out and talk to more people and do more customer discovery, and all of a sudden it's like, nope, we were focused on the wrong things. We need to focus on X, Y, and Z instead. So those are probably the two biggest. We see really big changes in pitch from now to end of program, and also kind of customer. Yeah.
Well,
Are you able to humor us with some of your success stories?
Sure. One really good one that I like right now is Remesh, one of our companies that went through the Barclays Accelerator in New York 2 years ago, a year and a half ago. They just raised a 10 million Series A with General Catalyst that led the round. So you can look them up. They're an AI market research company that's focused on financial services. Let's see what else. We have a company in our last cohort that's getting a good amount of traction. They're called Sigma Ratings. They do non-credit risk ratings, so in kind of complementary to S&P and Moody's and all those guys, but focused on governance and non-credit areas. So that's been a really interesting one, gaining a lot of traction, and especially like kind of third world or emerging market banking.
What was that one called?
Sigma Ratings. That's the other thing. If you're interested in the program, I recommend that you can go onto our website. We're very transparent. You can find all of our data points about how much a company's raised, which companies are still active, which ones have been acquired. You can find all of that data. But you can also see our list of alumni. So if you're interested, I also recommend you talk to alumni. Don't just take my word for it and John's word for it. Go talk to the people who have been through it and see what they found to be the most valuable out of the program, what they found to be the most challenging, whether or not they would do it again. All of our alumni will very happily tell you the honest truth about what their experience was, and I think everybody should talk to a founder who's gone through it if you're thinking about it.
how many from LA?
LA.
Okay, everyone.
That's
Did
why
you
we're
hear that?
here.
Did you hear that?
Get on the map.
Did you hear
That's my
that?
first question.
So everyone,
So far away.
apply.
From LA. It's
Oh.
really fun.
Yeah, we can break the spell.
Every year I root for certain ecosystems to get in, and LA is
Dodgers now.
LA is
Fintech.
definitely one for me. Yeah.
If a company wants to partner up with Techstars
Mhm.
and like Barclays or MetLife and
Yeah.
so on, what kind of commitment do you need from that company?
I am absolutely the wrong person to answer that question. But I can, I'll give you a card and I'll connect you with our partnerships team and they can tell you all of the details of what that looks like. I think the long and short answer is it depends on whether or not you you do a program like Barclays where you're a single partner, or whether you do a program like our music program or our Detroit mobility program, where it's a consortium model of multiple people or multiple companies around that industry. Anybody else?
Is the LA cutoff date or application date the same as in New York, May 13th?
No. LA has already had their date. They wrapped their applications in April. So if you're looking to apply for that one, it'll be, they'll open again next January. And then for the New York Fintech one, our applications are open now. And also we have a New York industry agnostic program And that one, their applications will open up again in July. We all run on like a rotating schedule, if you can't tell. So we have programs that run in Q1, Q2, Q3.
Any other questions? Let me zoom in into your.
If you think of anything else, my email is
Thanks a lot, everyone.
It's just kelly.fryer@techstars.com. So feel free to shoot me a message or go online, and you can also find it. And I'm here.